Okay, so I mean the gains are building on a little bit more. You're with us here on Trading Hour. 45 points on the Nifty, 11,022. So good to see some green finally after what has been it's been a dazed, confused, beaten down market now for the last so many days. It still is probably, and maybe this bounce may get sold into. Who knows? Advanced decline is still pathetic. I mean, 1,500 stocks are lower, 500 stocks are higher, 3:1 in favor of decline. So Rahul Arora, CEO, Nirmal Bang Institutional Equities, is with us. Rahul, thanks very much. Appreciate you joining in. First up, let's just talk about financials and NBFCs. What's your view?
It's not the best time to go overweight on it for sure, because I think there's still too much uncertainty. But I think where it started from was Yes Bank, and then of course what happened with the NBFCs. But I think at some point it's going to stop. There's no point timing it as to when that is going to happen. If you believe your price has come, then by all means.
Has the price come according to you?
If you want to be really brave, go out and buy Yes Bank.
This is the proverbial blood on the street.
I don't know how many people are on your channel telling you to buy Yes Bank right now. I'll stick my neck out and say go buy it. It's come down to one-time price to book. If you want to disbelieve the whole book, then it doesn't stop anywhere. It's a 2 lakh crore book. I mean, how much of that are you going to discount? I mean, there is a divergence. We've knocked off our own EPS by about 17–18% to reflect that. I mean, if you start wanting to go back and start finding divergences in FY 16, 15, I mean, this will never stop then. So,
what do you think will lead to a recovery in Yes Bank?
I think the first thing would be the appointment of the CEO. I think that's the most imminent of it all, because if Mr. Rana Kapoor does not get the extension as requested by the board, he's got only till 31st Jan. So they'll have to fast track the CEO. My guess is before the end of this calendar, they would have to appoint someone so that the person at least joins while there are some people from the old systems for a proper handover. So I think that could be the immediate trigger. But the question is, to what extent do you want to disbelieve the bank? I mean, it's our own senses, and we have downgraded along with the rest of the street. We're not in isolation holding on to our view. I mean, our earlier price target was well in excess of 400. We've got that down to about 300 or thereabouts. But it's still a bank. After revising down our numbers, we're getting about an 18–19% ROE coming to you at one-time book, and a 56% fall in the stock price. So if you want to believe that his books are cooked and this and that and the other and whatever else it is in terms of the rumor mongering, the stock cannot fall 100%. I don't think this is a satyam of any accord. I mean, there are depositors. There will be a proper bailout if it reaches those proportions by the government of India. I mean, there are a lot of salaried accounts in there as well. But that, I think, is an extreme case. I think 55% one-time book, 2 lakh crores, 20% ROE. At 180 bucks, I don't know how much more you have to lose. I think pretty much everything is in the price. You'll probably see a huge short covering rally regardless of whoever joins. And I've seen this time and time. Unless your business model is changing, as we've seen in the case of Infosys, no new CEO is able to take the stock price higher. But if your business model is intact, as we saw in the case of Britannia or Jubilant FoodWorks, and there are many other examples, the market will reward it with a 20–25% upside just on that appointment, is my sense.
So this fall that we've seen of 40% on a month-to-date basis, how much do you think is because Rana Kapoor is exiting, or how much do you think is that there is disbelief in the books?
So I think on our estimates, if you are taking if you just work with the divergence number that the RBI has, that's the bone of contention between Yes Bank and the RBI. I think about a 20% fall would have warranted, according to us, 20–25% fall. I think whatever you've seen in excess of that is probably fears about how much more this contagion could be if Rana Kapoor goes away. Just on reported numbers, I think this fall should have been arrested 20–25% back, is my sense. But I think it's way overdone. You're getting a nifty stock at one-time price to book. The
bigger issue, Rahul, though, is, I mean, I think the AAA which went to junk in the case of IL&FS, right? So I think that has thrown this doubt in everybody's minds that we didn't really believe this guy, but because you told us to believe him, we believed him and we bought his stock. I'm not talking about Yes, I'm just generally talking about, right? I mean, people who were rated AAA, but generally the perception is that they're not really AAA. I mean, there may be a AA or something like that. I think that is the doubt, niggling doubt and niggling worry, because we have NBFCs who are saying that we are one of the 5 odd NBFCs in the country which are AAA, but the market isn't believing them.
That's the feedback on the institutional investor side. So now we're transgressing from Yes Bank into the NBFCs, where you're questioning the rating system as a whole. I don't think something like an ILNFS, the regulator should have seen coming. I don't think these are things like, again, I go back to the point, this is not something like Satyam, where the promoter was hiding and it, there were, this is, I mean, a lot of these are financial institutions that are regularly audited by the Reserve Bank of India at least once or twice a year. So if this had to be pointed out, this should have been pointed out a long time back. You're actually, this is, so at the end of the day, on one hand, you have depositor money in the banks, which is basically the size of your balance sheet effectively. And on the other hand, you have the same depositors who are putting in money through mutual funds, which are effectively going into these stocks because you want a financialization of savings. So you're actually sending out a fairly mixed signal saying that, hey, we did our audits, we did not find anything wrong at that time, but, one fine day a rule changes and then, by all means, I mean, I'm not being an apologist for Yes Bank in any way. I'm just saying that, if these things were to be pointed out, it's very different from an auditor resigning from a Manpasand beverages, for example, as opposed to an ILFS going systemically belly up. I think that is as much a concern on the regulator side, and I have no bone saying that, as much as it is on the company side. Because even if you say it is the job of the promoter to be sort of to not be compliant, it is the job of the regulator to pull them up. So just one fine day, a change of rules, I don't know. But 2 lakh crores cannot...
No, change of rule, you mean what? You mean
in terms of NPA recognition.
NPA recognition.
Absolutely.
Okay.
So, I mean, the divergence is backdated. It has nothing to do with forward, right? No. So, and there has not been too much incremental lending post these divergences, especially to corporates. And you can see that on the private sector capex. So,
okay, let's end the conversation on a positive note then. What are you buying? Because there are a lot of IT stocks which have outperformed. They've done well. We have a couple of the HULs of the world which have given good returns year to date as well. So, what's on your buying list?
So, it's kind of funny because, when the markets are going up, you want growth, and you look at consumption-driven stocks. When the markets are going down, you want safety, and then people look at consumption-driven stocks again. So at both times, you find a bit of allocations. But I think this needs to be viewed in context of institutional positioning. Institutional investors are definitely going to be neutral to underweight financials right now. So what are they going to buy? They're probably going to buy IT because not that fundamentally IT is looking like the best sector. They're just going to benefit because of the rupee depreciation. Now, it's anyone's call whether it goes to 75, 77. That's academic. But it's just benefiting because of that. But I still believe that if you look at consumption-driven stocks, which are not, 50, 55, 60 times valued, there is still opportunity. So we still like, say, something like a Whirlpool, which looks interesting to us, coming to at about 34, 35 times FY20 earnings. We would still buy an IFB Industries, coming to at about 24, 25 times. Another sector that's been going through pain, which we have discussed in the past, is PVR and Inox. I mean, of course, it's pending a resolution over there. Again, something in the courts. But I think that could be an interesting accumulate. This morning, we have initiated on Kajaria Ceramics again. That looks like an interesting story. So I think there are pockets of the market that you could still buy. Not too many people track Sanofi. We've recently initiated on Sanofi with a 20% upside. We're talking about a 400 basis point margin expansion in Sanofi, 20-25% earnings CAGR coming to you at 20p. So not too many opportunities that are sub 20p. But a lot of these stocks that I've spoken to you about, barring Whirlpool, are coming to you, say, south of 25 times, which is not ridiculous compared to the other consumer staple names on the upside. But I don't think the market is not giving opportunities. There are enough. And especially if you think that there is some regulatory overhang and the stock is corrected and it's beaten down and you can go and buy it. Like Inox, for example, is coming to you at 11, 12p. More than comfortable buying it, So I think these are some of the names where you could sort of concentrate your holding. One sort of very high conviction idea I'll leave you with, because I've been a big bull on Jubilant. I think you could see a similar price movement over the next 1 year in Westlife Development. The stock has doubled. Jubilant, of course, has gone up 4 or 5x. But I think the same theory that played out in Jubilant, we're starting to see evidence of that play out in McDonald's. And I think that could be one stock that does really well over the next 1 year. Don't look at the valuations on a price to earnings. My only request to investors would be look at it from a perspective of EV to EBITDA. It's coming here about 24, 25 times. It's not the most expensive in the consumption space, but that could be one stock that could do
What's
pretty
your
well.
target price on that?
My target price on Westlife would be about 25-30% higher from where the stock is currently. But again, it restricts us from valuing stocks on FY20. but it has the same story as Jubilant. I think the operating leverage is so strong that you could, in a 3-year period, see a doubling of earnings, which not too many stocks would probably give you. So that's probably one idea you should have on your.
Well, thanks very much. Appreciate you joining in.
Thank
and,
you.
Hope we meet in better market conditions the next time you're.
Hope Yes Bank's a little higher.
By the way, you've downgraded Yes Bank, right?
Because we've not downgraded our rating. So we still have a buy on it. We have reduced our price target.
Okay, we'll correct that
flash. It's still a buy rating for us.
Okay, all right. Thanks very much, Rahul. 46 points higher, so 11,024 is where we're at. We take a very quick break here. We come back. Kunal Shah, Edelweiss Financial Services, will join us. And what else but NBFCs is the focus of the discussion. Back in 2.